Good morning, everybody. Hey, welcome to Tuesday. It's hard to believe we're almost in the middle of October, October 13th today. I hope that your week is off to a good start. Hey, yesterday was just a great day. We'll talk about that. And we get the first part of earnings season starting today with some of the big banks reporting. So looking forward to that discussion with Dave coming up next.
Point. That's Patrick Swayze there, and she's like the wind, or the vapors, or something like that. It's 8:39. 21 here before 9, giving Phillip Statler a chance to catch his breath down at Statler Financial Services. Here we always check in on your money at this time, and yesterday was a pretty darn good day by all accounts. Maybe we can keep it going as we start out earnings season today. Maybe, sort of, hope so. Phillip, how are you this morning?
Hey, I'm doing well today. You're right. Yesterday was better than, let's just say better than expected. It was a barn burner day for the NASDAQ especially.
Boy, was it. Everybody seems really excited over Prime Day for Amazon and the introduction of Apple's new phones. NASDAQ was up by 96 points. That was over 2.5%. Dow was no slouch. It was up 250. And the S&P 500 was up 1.2%, up by 57 points yesterday. And the only thing I can think of is rumors, okay, fine, things are looking okay and progressing as expected on the COVID front. And by and large, Congress did what they were expected to do, which wasn't much of anything as far as the Barrett hearings are concerned. And all's right with the world if you look at yesterday's record, right?
Well, that's what it seems to be saying. Now, today is going to be a little different story as we get ready to open this morning. It's we're not giving back. We are giving back a little bit on the Dow and the S&P, but the NASDAQ is continuing to full force ahead.
Yeah, it sounds like it. The word I'm getting out of my pieces anyway is that the combination of two things going on. Number one, Apple introducing their new iPhones in a few hours. That's expected the beginning of a new super cycle on iPhone sales. And then the annual retail orgy online, Amazon's Prime Day, is going on, and everybody has high expectations for that, both of those two driving so much of the NASDAQ stocks, both their own stocks themselves, plus the service companies that provide services for those two. It's just a party time on the tech-driven index, isn't it?
It definitely looks that way. It is definitely had a great day yesterday, and it looks like it could be a great day follow-up today.
That's a good day to be into NASDAQ, that's for sure. Starting the morning out with government data dump information, because I know we got a boatload of reports to talk about, so we'll do the Reader's Digest version. Consumer inflation CPI report from last month was up 0.2%, and that, according to my analysts anyway, is about what they expected. Did you have a different picture from yours?
Nope, that's exactly where we were. We expected 0.2% in both CPI and core CPI. So I think that comes in as expected. So I don't think that's really going to contribute anything to the indexes today.
Understood. About 2% inflation rate, too, which is about what the Fed says they'd like to see, even though they've de-emphasized trying to get to it of late. The other one that comes out is the NFIB Business Index, the Optimism Index for Business. Anything over 100 is good, and it's at 104. Once again, the analysts were expecting that. So, by and large, everything's holding steady so far this morning, except for a couple of business items from the companies that are reporting, right?
Well, that's true. And I think the NFIB, that's a lot to say there. It is the best reading they've had since January. I think it's important to point that out. But there is still some uncertainty as I read some of the report in terms of, the extended PPP is running out now. I think I saw 25 to 30% of the companies expect to lay people off now. So we do have some uncertainty there. 40-something% said if the government offered another bailout, they would participate. So it's a good number. Don't get me wrong, but it's still there's some uncertainty there. I think we need to be aware of.
There are some flies in the ointment, without a doubt. The other tidbit that doesn't necessarily relate to a stock earning report, which we'll get to in a second, because it affects a business that's here in town. AMC Theaters announced today they've got enough cash left over to be able to survive until about the end of the year, they say. If they keep bleeding and losing money the way they are, they could find themselves in trouble with the other theater companies like Regal announcing they were closing a whole bunch of their theaters. We need some blockbuster releases in order to get the theaters operating again.
Yeah, and I just don't see that coming this year based on what I'm seeing and what I'm hearing. So that's going to be one of those things that they're going to have to dig in deep and try to survive. I'd hate to see the movie theaters go out of business across the board, because it is, it does have some entertainment value to get out of the house and go and be able to see it on that huge big screen. So we'll have to wait and see how everything kind of lines up.
Yeah, we can always we got to cross our fingers that the inside theater isn't going to go the way the drive-in. There have been sea changes in the way people behave during this COVID time. And, we've seen so many of the blockbuster releases going out, the pay-per-view services like Disney Plus and the like. It's at the point right now where a theater owner's got to look at it and say, boy, the world is not going to be as bright as it used to be no matter what happens.
Yep, you're right. That's true. And it's going to take a while for them to build back up if they can make it through this long-term drought that they're in right now.
Absolutely. It is a high holy day for consumers, talking about the Apple event and Amazon Prime Day. It's also kind of a high holy day for investors, because we actually get the beginning of, drum roll here, earnings season. And some of the big companies reported early, and we'll talk about the financials probably first of all, because we were saying yesterday they're kind of a bellwether for the rest of the economy. And on the financial side, from what I heard anyway, things don't look too bad so far, do they?
They look absolutely great, Dave. And I think a lot of that, as I read through some of the reports, is that, in the last quarter, a lot of them made some pretty hefty loan reserves, and that cost their income statement. And so we're seeing them reduce those loan provisions, which is going to shift back to the income statement, which is helping them out quite a bit. So let's start with Citigroup. Citigroup beat by almost 50 cents a share. Their revenue was not a big improvement over what was expected, about $1/10 billion. But they did do well. They're trading up this morning, almost 1.5% before the market opens up. And now on the other front, we've got the other major bank we have is JP Morgan, and they beat by 70 cents a share. Their income was up also. They're trading up this morning. Let's see if I can put my fingers on it exactly here. Again, they're up about the same, about almost 1.5%. So the two main banks are kind of in the same boat. The other financial we had was BlackRock, and BlackRock is the world's largest asset manager, and they really did well. They were expected to earn about $7.80 a share, but they blew that out of the water, and they actually earned $9.22 a share. So a huge increase for them. They've been able to increase their fees, and they attracted $129 billion inflow during the quarter. So that was some good news for BlackRock. They're up almost 4% this morning, Dave, and they're not a cheap stock. They're expected to open at $639 a share, which would be a new 52-week high for them.
Ooh-wee. BlackRock's not one of the household names because they don't have a corner office like the Wells Fargos and the Citis and all the other banks do, but they throw a lot of money around, and like the other financials, they're a bellwether for how the rest of the economy is doing.
They are. They do give us an idea of what to expect.
Understood.
So that's the big winners.
Then we got to get to winners. We got some bad news, don't we?
We do. We've got Johnson & Johnson and Delta. So let's start with Johnson & Johnson. So they beat. Don't get me wrong. They had a good quarter. They beat by 22 cents a share. Revenue came in above forecast. But the big news for Johnson & Johnson is that they've had some issues with their COVID-19 vaccine. They had one of their participants get an unexplained illness. And so they have had to cut back what they're doing there in terms of their testing and trying to get this whole thing, COVID-19 vaccine, ready to go. So they're trading down this morning 1.5%. The last one I have on the earnings front is Delta, and Delta didn't do very well. Their revenue was down 83%. They really missed expectations significantly. So they're just not having a good quarter. And they're trading down about a little over 3%, 3.25% this morning. Still midway between their 52-week low and their 52-week high. So not down as low as they have been, but they're suffering today, given what's come out about their earnings.
And given what the news item we had a couple of weeks ago about those monster airline layoffs of the flight crews and flight attendants, probably not a major surprise that Delta was going to end up losing their shirt in the process. It'll be interesting to see how the other airlines do as earnings season continues, right?
It is. It's going to be interesting to see a lot of the earnings reports in terms of the industries and how the industries are being treated and what we look forward to, and if they give us any guidance or any direction as to what they think may be coming for the next quarter.
Understood. That Johnson & Johnson thing is interesting. News item I was reading over the weekend that these pharmaceutical companies that have gone into COVID-19 vaccine research, basically they've pulled all their research teams off all the other good stuff they're working on in order to pour it all into COVID-19 research. So if Johnson & Johnson's vaccine ends up being a bomb, that's got some substantial implications for the company's next, maybe even 12 months worth of activity, because everything else has been put on hold as well.
Well, that's true. The other thing, we're talking about COVID-19 and the vaccine. So I want to bring this up because this caught my attention on two different fronts. I've got a headline: a Dutch woman dies after being reinfected from COVID-19. I saw a headline also this morning: a 26-year-old young man was reinfected with COVID-19 after having it once. So this brings some concern, at least to me, in terms of what is the, if we do develop, when we develop the vaccine, how long is it going to be good for? Is it going to last 4 months? Is it going to last for a year? What's it going to look like?
Yep, something scientists have been warning about. They don't know whether or not immunity is long-lasting or not, and there are indications from those two stories at the very least that the immunity is not a permanent one you get even after you pass through the disease successfully. One more thing to watch. Bringing it back up, it was a green day yesterday on the equities market. Phillip, 45 minutes before real money gets thrown around this morning on Wall Street, what are we looking at today?
Hey, we've got a mixed bag. We've got the Dow and the S&P down. The Dow's down almost 0.6%. That's $167. The S&P 500 is down a little over 0.3. That's $12 down. The NASDAQ, when I first got to the office and started looking, it was up 140. It dropped and then it jumped back up, but it's back down. It's positive, don't get me wrong, but it's only up 0.5%, which is $56. It was up as much as 3 times that amount earlier this morning. So it's got a little bit of pressure heading into the open this morning. As we look at gold and silver, they're both trading down. Silver's getting beat up pretty bad again this morning, down 1.6% to less than $25 an ounce, $24.86. Gold is down a little over 0.5% to $1,917 an ounce. Crude oil is up 1.4% to $39.98 a barrel, almost $40.
Getting close, finally. Overseas markets, we had a mixed bag pretty much across the board. Asian rim markets were directionless, one side or the other of the zero mark. European markets are off fractionally midway through their day as they look at our earnings season beginning. Phillip, it's inexplicable sometimes and completely uncontrollable what happens to your money, but the only thing you can control is how much of that money is at risk. That takes advice. How do I find you for the advice?
Dave, this market is bouncing back great right now, so it's a super opportunity for folks to readjust the risk in their portfolio. Give us a call at 863-382-0037 to schedule your financial x-ray. And then catch us on Facebook. Just search under Statler Financial Services, like and follow our page there. And then this weekend, grab the Statler Financial Radio Show, 6 a.m. and noon on Saturday, 10 a.m. Sunday morning on Highlands News Talk 730.
All righty. The noon run on Saturday, by the way, announcement for everybody will be at 11:30 our time because the Gator game begins at 12:30 with the broadcast there. So we're going to start your show at 11:30 on Saturday morning. All right?
Hey, man, I appreciate that. It's getting a little old getting beat out by the Gators all the time. So
if you were a Gator fan instead of a Noel fan, you'd be cheering, right?
Probably so. Probably so.
Hey, they were dignified against Notre Dame this week. A loss still hurts, but I mean, hey, getting beat by Notre Dame, worse things can happen, right?
Well, that's right. They did look a little better.
That's true. Have a good day, my friend. I appreciate it. See you tomorrow.
All right, Dave. Thanks, man.
Take care. It's 105.7 Light FM and Statler Financial Services, Phillip Statler. Wait and see.
Hey, thanks again for tuning in today as we had our discussion with Dave. I hope you're doing well. I'd love an opportunity to chat with you to see if your portfolio lines up with your goals, your retirement, and your risk tolerance. Give me a call and let's schedule that time. 863-382-0037. Actually, you know what? Better yet, there's a link in this post. Click the link. It'll go right to my schedule. You can schedule a 15-minute phone call. Have a great day. I look forward to speaking to you again tomorrow.